I remember back in the day, I was, when I was questioning FTX, I was people go, oh no, they got tons of money. How much they're spending all that. But that's the asset side of the balance sheet. You don't know about the liability side of the balance sheet. You have no idea, right? We all know guys who buy Lambos and they're bankrupt.
This episode is brought to you by Propy, which is leading the charge in putting real estate on chain. Propy is a game changer. You can buy and sell real estate with cryptocurrencies using the Propy platform, which is powered by a blockchain, of course, and they have a native token called Pro. And I've been an investor in the Propy token since 2018. So Propy is a licensed Web3 pioneer operating since 2017. They have facilitated over $4 billion in transactions. They're putting titles and deeds on chain. They use Coinbase for their crypto escrow service. So this is a great platform. And once again, they are ahead of the curve when it comes to putting real estate on chain. And they just launched a great campaign where you can earn some of the Propy tokens. And it's simply by doing tasks such as sharing their vision video, signing up and inviting a friend, and much more. So if you'd like to learn more about Propy, visit the link in the description.
Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and today we're recording at Station 3 in New York's Financial District. And my guest is John D'Agostino, who's head of strategy at Coinbase Institutional. John, great to have you.
Tony, thanks for having me.
John, you have a fascinating background in TradFi. A book was written about your story, and of course, you're now in crypto. So I believe you have a lot of great perspectives to lend to us as we see TradFi entering crypto and going all in. But let's start with your background. I read that you grew up in Brooklyn. Tell us a bit about that.
Sure. I was born to immigrant parents in Brooklyn. Very traditional Italian-American family, a lot of the Italians that lived in Brooklyn. We moved to Staten Island when I was a teenager, because that's kind of what you did back then. If you were able to cobble together any money, you got out of Brooklyn to go to Staten Island. Now I think it's Jersey or Manhattan. And it was great. It was great. I mean, my mother worked 3 jobs. My father worked 3 jobs. I was thinking about COVID recently. I was talking to a friend of mine about how those 18 months, I probably spent more time with my daughters than my dad was able to spend with me pretty much my entire childhood. So I would remember he would come home and we would run outside to play catch. And I remember being scared about the street lights going on, because I knew when the street lights went on, he had to get in the car and go to his night job. And so I remember just playing catch with him and being so happy and excited. And then I would start to see it get dusky. And then I would just start staring. I was get hit in the face with a ball, because I would start staring at the street lights like, don't go on, don't go on. But he definitely, he taught me about how to work like an animal when you're working for something you believe in. So he believed in his family. He believed in giving us a better shot. I was the first person in my family to ever go to college, much less these amazing schools I was fortunate enough to go to, Harvard and Oxford and all these wonderful places. And I did that, with parents who never made more than 50, 60 grand a year. And yet they managed to do it in a way that I wasn't burdened with loans too much. So that was his passion. That was his goal. I don't think he ever had a job that he was passionate about per se, like the job itself. But his whole thing was his kids were going to have a much, much better start than he and my mother were able to get. So when you believe in something that passionately, you kill yourself trying to achieve it.
That's awesome. And I could relate to a lot of that with my parents, immigrants as well. And they just come and they work hard. They put their heads
Where
down.
Were they from?
Originally from Guyana in South America.
Okay.
And I came when I was small in New York, grew up in Queens, and lived in Brooklyn a bit. My wife is actually, I think, near where you grew up in Bensonhurst and Bath Beach area. Yeah. So I have to ask, because I'm a big fan of it, L&B's Spumoni. Are you a fan of it or no?
So there's a couple places that are iconic, but they're also good. I think like Tao in New York City, I always tell people, go to Tao. It's like cheesy, but it's actually really good sushi. L&B Simone it's just good. Like the food's good. So when you can combine like the iconic nature of it and good food, it's fantastic. Yeah.
So how did you end up in finance? Was that something you wanted to get into, or it just happened?
It just happens. I get asked this a lot. I speak to kids a lot. I'm an adjunct lecturer at a few colleges, and I always get asked, like, "What's the path?" And I'm like, I wish I could tell you. Talk to somebody who was more focused than me. I kind of fell ass backwards into everything. Look, I was a good student, so I was lucky that I tested really well, and I was able to get. And because I was testing and we were kind of poor, I was able to get into a lot of great schools. So I had this sort of head start in terms of I was going to these schools that were feeders into into different types of programs, whether that was banking or law or medicine. So I had no idea what I wanted to do. I took the LSATs, I took the GMATs, I took every test. I started off doing a JD MBA because I just didn't know what to do. And I got into Harvard. And I was like, as an immigrant kid whose parents didn't go to college, you get into Harvard, you go. I think things have changed now, but I was like the last generation that if you got into one of these schools, you just went. It didn't matter. If you could scrape together the money, you go because your life is going to be better just with a general degree. So I graduated. I dropped the JD a couple years in because I just realized I want to be a lawyer, and then graduated Harvard Business School, again, not really knowing. I'd worked at McKinsey for a little bit. I'd gotten what they call a pre-matriculation internship. Back then, when you got into HBS, they used to reach out to you and say, hey, come work for us for a summer. We'll pay you a ton of money. And if we like you, we'll pay for business school. And I was like, awesome. And I worked for them, and I got the deal to pay for business school. But you sign on for like 3 to 5 years if you take the deal. And so I realized a year into HBS, I don't want to do that. So gave them their money back. And then just graduated really not knowing. And I did a bunch of interviews. I got lucky enough, I got a job offer from a big investment bank. I was all set to go do it because, my parents were counting on me to make money. And of all the things, all the paths, that seemed the one I most had the aptitude for. And then I had won a fellowship to go to HBS from this organization called the National Italian American Foundation. I'd won their annual fellowship. They paid for about 2/3 of my HBS degree, which is why I was able to give McKinsey their money back. And I was thanking them at like their event. I was like, thank you for giving me this great opportunity. And this amazing guy, this guy Vinny Viola, who was chairman of the New York Mercantile Exchange back then. He was the founder of EWT, which is now Virtu. But just this like iconic guy. He grabbed me when I got off the stage, and he was like, what do you do? And I'm like, I'm supposed to start working for insert brand name investment bank here. And he was like, no, you work for me. You start with me on Monday. And I was like, I remember I was sitting, I was like, sir, like I have a job offer. Like, he's like, and he was surrounded by all these like the chairman of the New York Stock Exchange. And they all looked at me. They were like, you should do it, kid. You should do it. And I thought about it over the weekend, and I did something kind of crazy at the time. Actually, that's not true. Monday morning, I showed up at the NYMEX at 6 a.m. before anyone was there, and I gave a note to the security guard. And I said, Mr. Viola, I showed up. Now it's your turn. Please make me a real offer so I know what I'm quitting for. And then I went to go work at the investment bank startup program. And about 6 weeks later, I got a phone call, literally 9 o'clock at night, from his executive assistant saying, go to Morton's. It was Morton's. Go to Morton's right now, downtown. And I was like, I got on the subway, went to Morton's, and he's sitting there with a bunch of really important people. And he's like, all right, sit down. He's like, and he started interviewing me. He's like, how much you making at this? Oh, fine. Well, I'll match that. Oh, okay. All right. Now you're starting tomorrow. And I was like, I can't start tomorrow. Like I need like a week or so. And so eventually I resigned. I just said, you know what? I'd rather have an interesting life than this, what was perceived as being a guaranteed path to wealth. And I just started working for him at the NYMEX. And I was sort of his like executive assistant / guy. And I did personal. He bought the New Jersey Nets, and I worked on that. And it was a ton of fun. I didn't make any money. But I had a really interesting life, and I was learning. You don't learn a ton with your MBA. You learn some from your peers, but you don't learn a ton. I learned more, I think, working at the NYMEX and for him in 2 or 3 years than I think I would have learned in 20 investment banking programs.
Wow. So was he like kind of your mentor? And like you said, like having the hands-on experience, hitting, actually touching grass and doing the work helped you to learn more.
Oh, it was trial by fire. I mean, I remember one day he wanted me to know how to trade. So he sent me to the floor of the NYMEX, and he gave me some money. Like, at the time, it was like $5,000, which at the time for me was like, I couldn't even imagine $5,000. And he's like, all right, he taught me the basics of trading futures and options. And I went into the futures pit, and I lost it in 5 seconds. Like 5 seconds, I mispriced it. And the guy was like, sold. And like, and I went upstairs. I was like crying. I was like, oh my God, I'm going to get fired. And he was like, no. He's like, I wanted you to learn what this is like. And I started, even though I worked at the executive floor, 18th floor, I think they called it, I would spend a lot of time in the pits. I spent a lot of time talking to the traders, sort of understanding, I view it as very lucky. I saw the end of open outcry capital markets. I was able to see the physicality of when buyers and sellers meet. So it was like a wonderful place to kind of experiment and understand how liquidity is built and how market makers work and how buyers meet sellers and bid-ask spreads cross over, because you could actually see the people doing the math. All of that moved in like 02, 04, started moving what we call upstairs, which is now electronic trading. We were the ones who implemented electronic trading for commodity futures. My first job was to hire a programmer to develop a trading app to replace the pick cards.
What year was this?
2003, 2004. Great. It feels like it's 1960 because it was so late, but they wanted their floor. So we were tasked with destroying their way of life. I got punched in the back of the head one time on the floor of the NYMEX because the traders saw me as somebody who was the beginning of the end, right? This handheld trading app, even though it wasn't replacing them yet, they saw it as the beginning. They knew that their days were numbered. NYSE was going electronic, like other markets already been electronic. And so they really were vociferously against this modernization, which I get. It was their way of life. And it was a great job if you could get it. My God, a floor trader on the NYMEX was just an extraordinary job. But it was clearly outdated and clearly needs to be modernized. I kind of think about that parallel with tokenization. I got to see one major technological paradigm shift, and I got to hear all the people saying how it would never work. I remember the traders like, these screens are never going to work. I remember this one guy grabbed me. He goes, you know the reason they haven't changed the design of the spoon since the caveman times? It effing works like that. And he's not wrong. That's the thing. That's not a crazy statement. Right? There's a reason we have certain policies and functions that last for a long time. Tony, this thing was amazing. It looked like a bunch of ants running around. It priced oil perfectly. Very few trade breaks. It worked. It was just limited. So the technological shift allowed it to expand beyond where that floor would never be able to go. Does that make sense?
Yeah. And you mentioned you are now also at the cusp of the next big change with tokenization.
Yeah.
So do you see similarities? Obviously, we're not dealing with oil or natural gas, but we're dealing with commodities like Bitcoin and other coins. With tokenization and also TradFi being the gravitational pull, they can't run from it anymore. They're here.
And I see, it's funny. I see and hear the exact same arguments against this inevitability that I saw and heard 20 years ago when I was a kid. And the thing is, when I was a kid, I was so in awe of these guys that I believed them. I was torn. I would go up like, maybe electronic trading isn't the future. Maybe the floor is the way it should be. It's been 100 years like this. And they would tell me stories about, the origins of the stock exchange. It was a tree that traders would meet around to swap certificates. And they're like, there's this history there, and there's this human component. And I would question myself because they were again, these are, I want to be, I think sometimes our industry and any industry that's trying to impose a paradigm shift, they're very sort of dismissive of the incumbents. And yes, some of it was BS. Some of it was just they were corrupt. Like the board of the NYMEX also had floor seats, right? So they were working, they were talking their book, as we used to say.
Oh, of course, yeah.
But some of it's not wrong. Like I think new technology, especially for mission critical applications, like the price of crude oil is important. Right? If you're on a plane and the pilot comes out and says, hey, I got great news. We have this clearly superior engine technology. It's clearly superior, and we're the first ones to test it today. You might be, like, maybe I'll be second, right? So I do think we have to be thoughtful about attacking everyone who's like, well, maybe we should be careful about this. They're not all Luddites. They're not all corrupt. They're not all stupid. There are reasons that these systems are battle tested over time, and the new system has to prove itself. I believe that. So I do believe tokenization will replace, but it should replace particularly mission critical applications. It should earn the right to replace it. And it is, by the way, when you look at like its ability to conduct transactions overnight and the scalability, it's being pressure tested through all these flash crashes and things like that. It's earning its right to replace that legacy system.
That's such a great point. And we sometimes who are in crypto, we want it to happen right away.
Right now.
But TradFi is like the tanker ship, right? You can't turn like a cruise, like a speedboat, and it's going to take time. And also change is hard for human beings, like in general. So these things do take time. Now, you were particularly trading oil and natural. Did you do other commodities?
Yeah, so the NYMEX traded a bunch of commodities, and then the NYMEX bought the COMEX that did metals as well. So I saw cotton, we got the ags, the softs, cotton, things like that. Then precious metals, palladium, silver, gold, and crude oil, natural gas, and distillates, bunker fuel that goes into ships, things like that. So the entire suite of global commodities, the NYMEX was the largest center of that. And then eventually the CME bought the NYMEX after it went public.
So you had your story was told in a book written by Ben Mezrich, which was the true story of rigged, the true story of an Ivy League kid who changed the world of oil.
Yeah.
How did this happen?
So the story, I got this really amazing opportunity with NYMEX. Again, I was a young kid, I worked for Vinny, and one night he got a phone call from Dubai. And it was a very senior person saying, hey, you should think about opening up an oil exchange in the UAE. This was 20 years ago. This is before Dubai is what everyone knows it to be now. And I remember Vinny popped his head out, and I was the only guy there. I was the only guy still working because nobody worked. There was like a post office there. Nobody worked past 5. And he's like, John, come here. He's like, you want to go to Dubai? And I was like, I'd never even been I went to Oxford for a year, so I was in London. That's the only time I've been on a plane. And I was like, yeah. He goes, all right, I got this invitation from this sheikh, and there's no way we're doing an exchange in Dubai. There's no way. But you go and you be nice to them, and you tell them, and tell them maybe, and then we have to be nice because it was like a high level invitation. So he sent me as sort of an emissary. Again, I was 20 something. I was a kid. I didn't know anything, and I went there. And even 20 years ago, Dubai was just extraordinary. And I went to the souk, and I saw the way the trading occurred in the gold souk, and I was like, this is the NYMEX floor. I mean, they understand price discovery. And I did some research into the way the economy was growing, and I always had this vision of Dubai. I'm like, this place is going to be the next Switzerland, and that it's going to balance global tensions between East and West. And now that's proven true. And I was like, this is, and then there was another nuance of the oil market, which is most of the world's oil is what's called sour crude. It depends on the sulfur content. And yet the benchmark in New York was a sweet crude. And it never really made sense to me. I'm like, we should have a sour crude marker as well. They're different types of crude. They're not the same. And so I came back and I was like, Vinny, we should look into this. And, he trusted me enough to say, all right, he's like, you want to make this your pet project? Well, there's no way it's ever going to happen. And fast forward 2 years later, we signed a deal to open up the first ever Middle Eastern derivatives exchange to trade the world's most important commodity. I get credit for it. Obviously, there was a whole team of people. I think it's fair to say I was the driver. But of course, without Vinny and others, that never would have happened. Sheikh Mohammed and the amazing team in Dubai. So, the papers picked it up and the Wall Street Journal and everything. And Ben Mezrich actually knew my wife, who was my girlfriend at the time. They lived in Boston together. And he's like, he called her. He's like, is this your husband? And she's like, or fiance at the time. And she's like, yeah. And he called me. He's like, I want to write a book about you. Now, this is, Ben was not Ben yet. Okay. He had one bestseller.
Okay.
And then he had a couple bestsellers under a pen name. He wrote science fiction as well. Holden Scott, I think it was. Anyway. So he was getting big, but he wasn't like Ben today. And which was good because when we did my life rights deal, I had way more control than probably the Winklevoss twins did because this was like early Ben. And we did the book. And in between writing my book, he blew up even more. So then when the book listed, it was like a bestseller everywhere. And it just was insane. I was not expecting I was really, and actually he writes in the foreword, it took him a year to convince me to do the book. I was really hesitant. I was like, I have massive imposter syndrome. So I was like, who the hell am I to have a book written about me? And I remember a guy I really respected, an old guy on the NYMEX floor, I was telling him about, I was like, what should I do? And he goes, you're going to be an old guy someday. And I'm like, yeah. And he goes, and your daughter or your granddaughter is going to bring a boy home and they're going to try to impress you. He goes, wouldn't it be nice to be able to say, yeah, that's cool, kid. I had a book written about me. And I kind of laughed and I was like, why not? Why not? Ben's the expert. He thinks it's worth it. And so we worked on the book together and it was great. It was a lot of fun. Yeah.
When movie?
So when I mentioned I have the life rights. So Ben doesn't like me for this, but there's been a couple of attempts to do the movie. I don't love I gotta be honest, I didn't love the early angles. So, but with Ben, given his fame, given his success record, we're always getting offers. So once I see a script, look, I know you got to sex it up a bit. I get that.
Yeah.
The book is like, Ben, he writes what's called narrative nonfiction. So the book is like 75, 80% true, and then he embellishes a bit. The movie I'll be Jason Bourne, right? I'll be way cooler than, but I do, I don't want the folks in the UAE. Like I saw a couple of scripts where they were to be terrorists or something. I'm like, no, I'm not doing that. We can make it fun and sexy, and UAE is crazy enough. Dubai is nuts enough without having to go to these bad places. I believe the UAE is very important for the US, and I don't want to do anything I love the way the book makes the UAE. I still get, to this day, I still get 10 to 20 college kids a month who reach out to me and say they want to go to the UAE because of my book. Wow. And I love that because I think the UAE is a great strategic partner for us. So I don't want to do anything to harm that reputation.
Let's fast forward now from TradFi to crypto. What was your first encounter of Bitcoin? What was your aha moment? And what made you decide to make the jump?
First encounter of Bitcoin is I worked for a company called Second Market, which was founded by a guy called Barry Silbert. And at the very tail end of my time there, they started trading Bitcoin. And so, I was sort of like a strategy consultant for Second Market. So I would go around, look at all the desks and see how they were doing. And most of the desks weren't making money, but they had a pre-IPO trading desk that was doing really well. They had an agency mortgage desk that was doing well. And then they had Bitcoin, which was doing well. And I got to know the guys who were running the desk. So that was my first time looking, just encountering it at all. Then I started teaching at MIT, adjunct, not a real professor. And I got to know the team at MIT that was the early team to do their Bitcoin class at MIT, and they gave the kids Bitcoin. I don't know how much that's worth today, but they gave the kids some Bitcoin to take the class. And I became good friends with the professors there. And the one in particular, we wrote, when the DAO hack happened, we wrote a white paper on just studying the DAO hack and just kind of cryptocurrency in general. And I focus more on the governance flaws that were inherent in that DAO. He focused more on the technical issues around Ethereum, and that was my first time doing a deep dive. And that paper kind of made the rounds a little bit, and then I got a phone call from Polychain, which is an amazing hedge fund, venture capital fund, and really smart guys. And in the paper, I described myself as a cynical enthusiast about crypto. Again, this is 10 years ago, where I said, I'm genuinely enthusiastic about technology. I'm cynical of the way it's being applied. And the guys in Polychain called, and they were like, we like this. We have a ton of enthusiasts, and we don't like cynics. So would you join our board of directors? And I was like, wow, what an amazing opportunity to learn from an extraordinary organization like Polychain. So that's when I was able to kind of really get my feet wet and start learning. And then about 3 or 4 years later, I started talking to Coinbase, and that's about 4 years ago is when I joined Coinbase.
Wow. And I read you're also the founder of the Alternative Investment Management Association for Digital Asset Working Group.
Yeah, so the short version there is when I joined Polychain board, way back then, nobody in the industry could agree on anything. And I don't mean crypto. I mean the TradFi folks who were servicing crypto, like the boring stuff, the accountants, the auditors, the tax advisors, all this stuff. And they wouldn't agree on anything. And I said, I knew all those guys. So I'm like, let's do a call. Let's just do a call so we all can just talk. And you want to service these clients. Like, how are we going to handle things like airdrops and valuation of tokens? I get early discussions. And that call, because it was so early and because we weren't shilling anything, we were just trying to solve problems, it grew and grew. So suddenly I had a 400-person conference call once a month, and it became too big for me. AIMA, Alternative Investment Management Association, is this wonderful nonprofit that's the largest working group for hedge funds, private equity venture, 9,000 members. They're awesome. And my friend Michelle, who is the head of the US for them, I called her and I was like, hey, I got this thing. It seems a shame to lose, but I can't do this anymore. You guys are the ones who should do this. And I gave her my call. And then AIMA turned it into this insane digital asset working group. There's a big conference every year. It's awesome. I get to call myself co-founder and co-chair, but I got to say, AIMA they have a lot of resources. Like this is what they do. I get all the credit. I get to go on stage and pretend this was all my work, but it's really Michelle and Ama. I'm now on the board of Ama. I got elected to the board this year. But I think it's an important group because I still call it the boring crypto group, because the goal is to just solve really thorny TradFi tactical problems that the industry needs in order to get audits done and get taxes done. Now it's like 600, 700 members, and it's great.
Wow. And John, what's it like to see the all Wall Street herd, TradFi herd coming into crypto? Is it surreal, or is it, it just makes sense? This is
they had no choice. They had no choice. I've been saying this for years. They had no choice. The hedge funds had no choice because they're all desperate for alpha. The average hedge fund is just not beating the S&P. So that's their job. Their job is to source alpha. So if you ask a hedge fund person and you say, are you trading crypto? Look, by the way, it's fine if they say no. It's fine if they say, you know what, look, I looked into it. I'm an equity long short guy. I'm a debt guy. I trade real estate. It's not my expertise. Not everyone can be an expert in everything. That's perfectly reasonable. That's another problem I think sometimes with crypto messaging is like, not everyone's going to like the asset class. It's just not everything's for everyone. But as an alpha, as an entity whose job is to produce alpha, if you haven't looked at it, if you haven't studied it, examined it, looked for possibilities to make money, you're not doing your investors a service. So I knew they would all have to look at it. And then I knew that 20, 30, 40, maybe even 50% would say, you know what, there's something here, right? Every commodities trader is going to love crypto because it exhibits the same characteristics and volatility and whatnot. If you trade like, early stage tech, you understand volatility. If you trade derivatives, you understand crypto. So there's like at least, I'd say 50 to 75%. Maybe if you're a muni trader or, large cap US long short spread trader, maybe it's not for you. But 50 to 75% of hedge funds, do things that are similar enough to this that they were going to look at it at some point and say, I can make money here. So I knew that was going to happen. I knew institutional allocators would start slowly dipping their toe in because the characteristics, particularly of Bitcoin in muting volatility, you improve Sortino ratio, you improve upside capture, another way of saying it, and you actually improve downside protection. By including BlackRock did a big study on this, about 1 to 4% of Bitcoin. But even for the BlackRock study, if you know portfolio management, you understand asymmetric assets that have high upside potential, and the gains are higher than the losses, which they are in Bitcoin over time. They're good for mitigating volatility and mitigating Sharpe and Sortino. So I knew they would get into it at some point. The insurance pools, all of that. There's a process you have to go through, and you have to earn the trust, and you have to get the regulatory clarity. And we had an openly antagonistic regulatory regime for 3 to 4 years. So when I talk to an insurance company or a pension, they're like, we just don't know what the SEC is going to do. They just seem hostile. I understand. Like it's like if you're a law-abiding citizen, right? And you said to me, John, do you think you'll get arrested today? I say 99% chance not. There's always 1% chance of anything, right? 99% chance because I know I'm a law-abiding citizen, right? But what if there was a cop who lived next door to me, who loved my wife and insisted and was going to frame me? I might be like, hey, Tony, man, there's like a 50-50 shot. I might go to jail because I got this bad cop who's acting on emotion as opposed to following the law. That's what we had for 4 years. So I get it. Why would any institutional investor feel comfortable when the cop is emotionally targeting?
Yeah, and it was like a lot of it politically driven. So even if you try to fight back, you're fighting against the government, you're not going to win.
Dude, it's like that movie. There's that movie about the cop who tries to torment the family. I forget. Samuel Jackson, I think, was the cop. There's there's an old movie, but anyway, you're up against the system. There's nothing you can do. So I think it's and again, I know crypto natives want to move much faster, but it is extraordinary what this asset class has accomplished over the last, I'd say, 7 to 8 years, given that half of them had an openly hostile regulatory agency, arguably multiple ones, that were willing to bend the law, break the rules, to target something that they felt that humans, not the agencies themselves, and by the way, not all the humans there, shouldn't paint them all with a broad brush. I know a lot of folks at the SEC, they want it to be fair, but certain humans made a decision, I don't like this thing, I don't want it to exist, screw the law, screw the rules, I'm going to do whatever I can to make it not exist.
So with the new government regime that's here, pro-crypto, we got the most pro-crypto Congress ever, SEC's dropping cases. You got the Treasury Secretary who's pro-crypto. Is Coinbase Institutional seeing a lot of demand since the beginning of the year?
Sure, I have to be very careful. We're in between earnings, so I can't give any numbers around that. But yes, I think everyone in crypto that services institutional clients is seeing increased demand. A lot of TradFi hedge funds exploring opening up accounts, wanting to be educated on. I did calls recently with community banks and different types of asset allocators. I would say there's never been more interest in being educated on the asset class, understanding how market structure works, understanding how custody works, understanding how how do I buy Bitcoin, how do I hold Bitcoin, what do the other assets look like, extracting, it can teach me how to extract data, on-chain data, so I can see how it would perform, back test it against my portfolio. I think there's never been more interest, at least in my experience, my time working, which is about 4 to 5 years of working, not counting being on the board of Polychain, but working actively in the industry. I haven't seen any more interest.
Wow. For those who may not know, give us a quick overview of Coinbase Institutional and the services you provide, type of clients you're working with.
Sure. So Coinbase Institutional is the institutional arm of Coinbase. It combines trading, custody, financing. Those are the 3 kind of major pillars. So we'll work with any institutional asset owner. Asset owners generally are core investors, so pensions, insurers, large asset pools that are taking kind of core positions, sovereign wealth funds, folks like that. And then you have funds themselves, so investment entities, and those could be either funds or corporate entities. They're investing on behalf of another investor. So their targets tend to be more short-term because they're judged on a more short-term basis, where like a sovereign wealth fund will be looking to take like a 10, 20-year, 30-year position. So different investors, different institutional investors coming in for different reasons, high net worths. Anyone who acquires more than sort of a periodic buy and hold entry into the market, and particularly entities that have they themselves fiduciaries because they're subject to stricter standards, right? So if you want to go buy Bitcoin for yourself, you can do whatever you want with it. You can host it, and you can use Coinbase Wallet, and you can self-custody it if you want. You could print the keys out and stick them under your bed. You can do whatever you want. If you're a hedge fund, even if you're not registered, but certainly if you're registered, you can't do that. There are strict limitations on how you can control and hold these assets. And those require corporate custodial solutions. It requires that you have an understanding of sort of how price discovery happens. So we have a smart order router that can ensure we go through out to, it was 11 at one point, it might be more now, I don't get my numbers wrong. We go out to a number of different liquidity pools, not just Coinbase. That's very, very important because we have a responsibility to provide best pricing. So again, as a fiduciary yourself, as a hedge fund, you have to be able to tell your investors, we achieve best price. So going to a single trading venue, it may be the best price, but you have to be able to prove it, right? So if Coinbase is the best price, that's fine, but we have to be able to show you it's the best price. Which eventually you can see on chain, but we make it a lot easier through that type of reporting. So all the things that institutional investors and funds and whatnot require so that they can, in a compliant way, run their business trading crypto, which has existed in equities, fixed income, and all these assets for 10, 20 years, we provide that. So we allow these regulated entities to trade in a compliant manner and custody in a compliant manner.
And of course, the largest wealth manager, BlackRock, is working with you and the team. Tell us about how that relationship came about and how they're leveraging your different services.
Well, there's some wonderful people at Coinbase that have been diligent, and I'll give Coinbase and Brian, I give him a tremendous amount of credit to be at a very early stage realizing that patience, credibility, regulatory clarity, and education were important, meaning they didn't have to go public when they did. They didn't have to subject themselves to that intense scrutiny. But there's a legitimacy that comes with that. There's a legitimacy in working with these large institutions when they decide they want to take the jump. I go back to like some of the classic failures we've seen, like FTX. I always ask folks, when they're thinking about your exchange, your custodian, your trading partner is your counterparty. Ultimately, right? It may be a brief moment in time, but for a brief moment in time, you're trusting them as your counterparty before they match up that transaction. how do you know the financial strength of your counterparty if they don't have public audited documents? Right. I remember back in the day, I was, when I was questioning FTX, I was people, oh no, they got tons of money. How much they're spending all that. But that's the asset side of the balance sheet. You don't know about the liability side of the balance sheet. You have no idea, right? We all know guys who like buy Lambos and they're bankrupt, right? So I think the courage to subject under a hostile environment to subject themselves to public market scrutiny went a long way. The second part is that when you subject yourself to public company scrutiny, you get better, you get stronger. So, BlackRock, again, the team did an amazing job of building a relationship, but BlackRock's not choosing anyone based on emotion. They're taking you through the most rigorous due diligence possible. And what I can say, because I didn't go through the BlackRock due diligence, but I helped lead, there was another couple of large entities outside the US who did an RFP and were looking at for a custodian. And I went through the Coinbase RFP, or that whole proposal piece. And I got to see how Coinbase presents itself. And then I got the feedback when they chose us. And the feedback was, it wasn't even close. You guys were so far beyond anyone. Now, I think there's other great companies in the space. I think that because it's like, Kenyan runners, right? Why they're so good at train at high altitude. I think being public's the equivalent of training at high altitude, where you just get stronger. So, we won BlackRock, but we also won the vast majority of all of the ETF applications that went out for custody. And the ones, one of the ones we lost was Fidelity, and they did it themselves. So I think, again, I think the rest, I think we have to stay on our toes, because I think the rest of the industry is going to catch up. And there's rumors about some of our competitors IPOing this year. And I think once they IPO, the race is on, because they're going to start feeling that pressure and they're going to get better fast. But I think there's an advantage to being under that public scrutiny for so much longer than everybody else. And I think that advantage showed in how dominant Coinbase was on those custody wins.
Absolutely. And, with the repeal of SOB 121 and then Operation Choke Point 2.0 being ended pretty much, Trump and these folks have been calling it out.
I got mentioned in the Senate hearing.
Oh, yeah.
Yeah, because I did research with AMA on, I actually, when the whole argument was happening about Choke Point 2.0, I knew it was happening. I had boards I was on, we all knew. In fact, about a year ago, it got so bad, I had AMA, so we set up a call. We reached out to a bunch of banks and we said, hey, who would like crypto fund clients? Because they're all getting debanked. And we had about 12 or 13 community banks say, yeah, state banks say, yeah, sure. So we set up this kind of like a Tinder. we did a webinar where we could match them.
Yeah.
And the bank CEOs told me, to my face, this wasn't hearsay, they told me, we love this, thank you so much, we want these clients. Do not make this list of banks public, because we've been warned by our regulators informally, not officially, if you do crypto, we're going to come down on you. So we all knew this. So when the argument started heating up, I had AMA do a survey, and we surveyed 250 funds, crypto hedge funds, and then another 50 TradFi funds for a control group. And the crypto hedge funds were 6 times more likely to be denied basic banking services. Again, this was key. Not like be my swap counterparty on Dogecoin. Because there's reasons why a bank would say no to that.
Yeah.
Again, it's fair. This was, can I open a checking account with cash?
Just to pay employees and things.
Just to pay employees, or what's called a fund subscription redemption account. That's just US dollars being wired in and wired out. It's AML'd, there's an auditor, there's an account. No different from any other hedge fund. 6 times more likely. So we published it, AMA published it. And then there was a witness in the Senate hearing, and the senator said, do we have any proof that this is actually happening? And he went, oh, John D'Agostino. And I didn't realize how many people watch C-SPAN, because, oh man, my phone just blew up. So sorry to interrupt, but yes, Choke Point 2.0 was real. It does appear to be being dismantled. But the rot runs deep. I mean, that's just not one person. That's like filtering through the entire organization, just kind of, hey, we let these guys know, we're not too happy with them. Again, informally, which is the shocking part.
I appreciate that context. That's really great, to hear that the bank CEOs, you guys are having those webinars or the call, and they were telling you like, hey, informally, we were told.
Yeah.
So with SOB 121 repealed, and with the FDIC loosening up restrictions, and the Fed also giving some green light on a few things, do you see banks being a competitor. Now, Coinbase has a head start, but let's say BNY Mellon says, hey, we got the best crypto custody. We've been the largest custodian in the world forever, things like that. How are you guys prepared to compete with them? Or are you going to go to them and say, hey, just plug into our system?
Yeah. So the short answer is, I think the banks will compete over time. We'd be dumb if we didn't acknowledge that. I think that there's other stuff besides SAB 121. There's Basel rules, capital. So there's still stuff that has to go away. They're doing some good work in the IRS right now, but it's not free and clear. It's an easier decision for a large bank to get into crypto now. It's not. There's still some hair. But that being said, there's less hair than there was. I think that it is. I do think it's likely that at least in the beginning, when they kind of look at the opportunities, remember, crypto is still small, right? Crypto still was 1%. We'll see after the last couple of weeks, but everything else went down too. It's still low single digits in terms of market opportunity. When you look at what you have to build, I talked about how Coinbase killed it on these RFPs. There is a tremendous amount of infrastructure. There's technical infrastructure. There's physical infrastructure. There's how you protect the keys. There's how you shard them. There's how you hold them. That's a lot of work. So I'm a big, huge bank. I say, okay, SAB 121 was repealed. This sounds cool. We think crypto is interesting. But really what we're really seeing is our high net worth clients want to buy it. Are we going to build out all of that infrastructure? Are we going to plug into all these liquidity pools and do the diligence and do all this stuff? Eventually, yes, I do when it gets big enough. But I think when they actually look at the opportunity versus the cost, I do think there's a higher probability they come to us and say, do this for us. Eventually, we'll have to be careful because eventually the opportunity will be so big that they'll be like, hey, we want to do this all on our own. But I think it's a massive competitive advantage to start early and be native. And by the way, we know this because if you look at again, go back to commodities trading, right? I won't name the bank, but there's big banks that every 10 years, they go into commodities trading, they run it for a few years, they have problems with it, and then they sell the business, and then 10 years later, a new CEO comes in, we should do commodities trading. Not everyone can be good at everything. Sure. And crypto, I think, is different enough, it's unique enough. If you trade equities and you try trading crude oil futures, good luck, they're going to rip your face off. It's different, right? You can understand the basics of it if you're a smart person, but it's very, very different. So I think crypto is unique enough, the relationships are unique enough, the technology is certainly unique enough that I don't see, Q3 of this year, us having viable large-scale competitors. But, I think Coinbase has the potential to be as large as any of these, and we actually already are. I mean, we rival our custody assets rival top-tier custodians in terms of size. Not BlackRock, but we are sizable. But eventually, we'll be a target for these large banks.
And do you think it's more so the competition may come on the tokenized side of the business, tokenized stocks and commodities? Bank of America's CEO just a week and a half ago said they are thinking of launching a stablecoin once the legislation is there. So maybe it's not Bitcoin and all the altcoins, but it's the tokenized assets.
Yeah, I mean, look, there's going to be a race to see who dominates tokenized securities, right? So Brian Armstrong said publicly, I believe last week at the Morgan Stanley conference, it was reported that the advances in DC start to open up a possibility of being able to trade native digital assets, which seem to be going towards being viewed as commodities mostly, and tokenized securities on the same platform. So I don't think he's specifically said Coinbase has any real plans in the short term, but he opened up that conversation. So, and I think he's also been very public about, wanting a one-stop shop for all asset class needs. So again, over long period of time, I do see that consolidation. Again, just like I knew eventually open outcry would go away and everything would be electronic trading. I mean, I'm not sure when it's going to happen, but I have a 8-year-old daughter. I'm pretty sure when she's my age, these assets will all exist in tokenized form, just because it's more efficient, it's easier, it's composable, it's programmable, and it allows for faster settlements. It's just better. It's just like, again, I know when you're in it, the current system seems the best. Open outcry seemed really cool in 2002, and it seemed to work. But you step back and you go, obviously electronic trading is better than this. And obviously, tokenization is better than what we have. I'm not smart enough to give you the exact timeline for when that's going to happen because these systems they work and they're important. I used to think that it was better to try to tokenize illiquid, opaque, kind of broken assets. Like I would get pitched on like, oh, let's tokenize crude oil. And I'm like, oh, but crude oil kind of, it's very liquid already. Like it's going to get tokenized eventually, but it may be the last one. I'm not so convinced now. I think that if you are willing to invest and you do it, tokenize an asset that has embedded liquidity, and show the benefits of tokenization in terms of faster settlement time, collateralization, things like that, you might have a better chance of being successful. So I'm not sure which assets are going to jump the shark, not the shark, the other way around. The tipping point will happen first, whether it's something like broken, like real estate, fractured, or something hyper liquid, because money market tokenization is working really well.
So I have some thoughts, and you let me know what you think about this. But like, if the Empire State Building got tokenized, I would be interested in buying it because I know over time with money printing, these asset prices inflate, right? They go up in value, and also Manhattan prime real estate, right? And then in addition, if I'm in another country and I cannot get access to the New York Stock Exchange, I can't buy Tesla or the Nasdaq, right? But if it's tokenized, you can create a truly global market. I can also have secondary markets, tertiary markets, fractionalization, DeFi. Yes. Okay. Are all those things possible?
Let's talk about this. So I love your idea about real estate. But the one thing I would say that tokenization, not that it'll be a failure, but like it's tough. When you tokenize something everybody wants already, no one is sure whether the tokenization was successful or just the fact that if you securitize the Empire State Building and allow people to buy $1 of it, it'd probably be successful as well. So I think for people to really believe in tokenization, you have to tokenize things that don't have massive embedded interest, right? You have to tokenization. The theory behind it is that not everything should be tokenized, just like not everything should be securitized. But the theory is there's certain assets that it's tough to buy and sell, and there is a bid ask, there is a market, but the friction between the bid ask spread. So I'm willing to pay $2, but I'm only willing to sell it for $4, right? That's a bid ask spread. Okay, so if that chasm's too big, if you want to pay $1 and I want to sell it for $1 million. It doesn't matter what form that we're never meeting, right? But if you have markets where, because the friction associated with the transaction in a traditional way, that friction represents the bid-ask spread or a big chunk of it, and tokenization can decrease that friction, now buyer can meet seller. Then you have a market. Then because tokenization can do cool stuff like being programmable, you can start adding all your bells and whistles. That's the core thesis, right? But what you said, which I loved, is this idea of accessing U.S. markets. So my dream, and this is just me, this is Coinbase, but my dream, personal, is tokenize the S&P 500 and use smart AML, so you're not, forcing people. And I want everyone in the world. I want parents from Guyana.
Yeah.
I want the young woman in Guyana who has scraped together $10 of savings. I want her to be able to invest $2 of that via tokenization, cheaply, efficiently, simply, and I think we should do it for free as a country, into the US stock market on her phone using tokenization. I want her to bet on the engine that is American capitalism. As a marketing scheme, I want the world to look at their phone and say, the US economic engine is creating a better life for me. Now, again, that poor woman probably can't open up a brokerage account at Charles Schwab. So tokenization is this wonderful you gotta be willing to like rethink how we do AML, all that stuff. But that's my dream. My absolute dream is tokenization is the only technology I'm aware of that would be able to let anyone in the world with pennies access the American dream via investing in our core capital market.
So John, on that note, with that in mind, 10 years from now, because everybody has a smartphone, you go to certain countries, even if they don't have proper infrastructure or computers or proper internet, they have a smartphone, they have internet connection for the most part. They have their Web3 wallet, they have USDC, they have a tokenized dollar that they can earn yield on. And then to what you're saying, they can buy the tokenized securities, maybe on Coinbase or another platform. Is that the future?
I think so. I like to think that's where we're headed. It'll be a slow, painful process because just like the NYMEX guys didn't give up the floor for 10 years longer than they should have, people will protect their interest. I do think that these are critically important systems that you have to test before you replace, and they have to earn the right to replace them. But again, I think that world is such an obvious improvement or with the fractured liquidity that we have now. So yes, I do believe that is where we're eventually headed. I think certain assets by nature will take longer to get there. By the way, certain assets may never get there. Certain assets, I don't know if at least in my lifetime we'll buy and sell real estate in a securitized manner or through tokenization. It seems that sometimes these inefficiencies persist, and it's bizarre to me. I just bought and sold an apartment. I sold my apartment and bought an apartment in New York, and hadn't done this in 10 years. And it's the same process. And there's just brokers and really bizarre negotiating tactics and that exists for a reason. I don't know what the reasons are. So it may take time. It may take a lot of time, and some assets may never become more efficient. But the vast majority of stuff will. And again, tokenization just allows us so much more flexibility, speed, security in how we do this. And for anyone who kind of questions that, I would say, tell me one core critical economic, medical, or other social system based on technology that is using the same tech it was using 60, 75 years ago. Just give me one example, and I'm happy to do it. Where you're not complaining, where it's the doctor on the Commodore 64 still printing it out with the things you rip off, like Madoff was using that stuff, right? So of course this is going to happen. The question is when, and the question is, what the transition period looks like.
With regards to some assets not being tokenized, do you believe, though, the infrastructure around these assets and the way we conduct and do contracts and stuff will be on the blockchain?
Yes. Well, again, maybe not everything, but a lot of it. A lot of it will be. I think. Look, blockchain to some degree, when you talk about shifting these types of systems onto blockchains, you're talking about reorienting how people view trust. Right, and that's fair, right? So you can I did this graph. You can graph this polling around growing distrust in centralized entities like corporations and government entities, growth of blockchain. So there were going to be certain systems and functions that we trust blockchain more than centralized entities. But I could also theoretically see a few that maintain trust in certain centralized entities. I can see some countries say we trust our government. We're okay with our government housing this information. I could see certain governments saying we're not comfortable, particularly with public blockchains, with our citizen sovereign identities. So I think it's going to be a mixed bag. But I think there are tons of things that blockchain clearly will improve trust, accountability, trackability, and I think all those things will migrate over time to those. The only reason I'm hedging is I don't ever like saying any one solution is perfect for everything, and I just think you have to be realistic about that. We live in a diverse world. People have different motivations. Sometimes you don't choose the most efficient, best mechanism. You're okay with the friction. You're okay with the problems. I always I do a lot of I speak to a lot of firms about cybersecurity because as a director, I have to worry about that. And if cybersecurity experts will tell you like injecting analog friction into a process makes it better, makes it safer. So a callback. If you're able to open up an account and wire money, if I'm on your hedge fund board, and your process for opening a new account and wiring money is entirely electronic, it's done all over email, you're at risk. Because somebody hijacks your emails and impersonates. But just something as simple as a manual callback, it doesn't eliminate the risk, vastly improves it. So sometimes inefficiency is arguably good. So I hate to say like everything will move, but just like the NYMEX was eventually going to go. I mean, there's still a floor. I gave an interview on the floor of the New York Stock Exchange. There's still a floor. There's still guys screaming and yelling. It's not that quiet, but it's mostly performative now. Yeah. But there's still some people with badges. There's still 37% of this country. I think we're right almost 40% still has landlines.
Yeah.
I looked it up recently. Right. Almost 40% of the country still has a landline. I haven't had a landline in 15 years.
I think my parents still have one.
Yeah, so I guess that's my point is like, let's be compassionate to people who are scared of change for the right reasons and understand that not everyone's going to be comfortable trusting their kid's cancer diagnosis. They're still going to want the hospital to have the information for some time, right? Eventually, over time, just like, the old joke is like, what were the rules of the internet 10 years ago? Don't put your credit card on the internet and don't get into a car with strangers. Now, the number one thing you do is click a button, shoot your credit card across the internet and get into a car with a stranger. But that took a long time, right, to trust that process. So anyway, long-winded way of saying, I think most of this stuff will shift. But you asked if all, and I'm going to hedge a bit and say maybe not all.
No, that's a great point. And look, we all don't live at the same standards globally, and infrastructure has to be there for these things to be put into place. So it's going to take time.
Not everyone distrusts their government the way we do.
Yeah.
Like so.
Speaking of government, last week was huge. We had the first White House crypto summit. President Trump signed an executive order creating a Bitcoin reserve and a digital asset stockpile. What are your thoughts on that?
Again, it's an interesting time to talk about this, given the Armageddon that's occurring, not just in crypto, but almost all risk assets. Okay, I just go back to basic principles. 6 months ago, if you'd have said to me, John, in 6 months, we're going to have brand new leadership at the SEC and CFTC who are demonstrably, I don't want to say pro-crypto, because I have no evidence that either of them are quote-unquote pro-crypto. I have evidence that they are fair, thoughtful individuals who are open to innovation and who want to see that innovation occur in the United States of America. That's what I know. I have no idea what their personal beliefs are about any specific technology or token. That will have those individuals in place, that the SEC would stop its aggressive regulation by enforcement, drop these kind of emotionally driven lawsuits. We'd have the announcement of some type of, people arguing about the nuance of it, but some type of, we would have an announcement that the U.S. government is putting its official stamp of credibility on Bitcoin and perhaps other crypto assets as legitimate stores of value. Whatever form that takes. I don't care if you're buying them, finding them on the street, seizing them. But the U.S. government is saying, we believe that of all the assets in the world, first time I remember this happening, we are going to put our stamp of approval on this asset as a legitimate store of value. What else? We have, just add that. If you said, John, in 6 months, we're going to have all these things. Whether Trump won or not, back when we didn't know who was going to win, even if Trump won, if Trump wins, these things are going to happen. How much would you bet on that? Yeah, I mean, Tony, how much would you?
I would not, because I
bet on that.
No, because I would think like Congress wouldn't have it. People wouldn't be on.
But he didn't even promise all these things. He promised some of them, but he could have easily been like, the administration could have been like, all right, thanks for getting me elected. I'll give you the bare minimum, and we'll replace Gensler. Okay, there you go. Good luck. Again, we're a substantial group, but we're not that substantial. So the what's happened is so extraordinary and so positive and so likely to have a carryover effect as other countries, both the countries like the UAE who've been trying to win this business, but also the countries that have been on the fence, are going to start racing to compete. I won't say which, but I got the chance to meet a couple of politicians, and one of them doesn't like crypto. Not like in a... Again, people cannot like something and it's okay. He doesn't not like it in an annoying way. He just doesn't like it. He doesn't believe in it. And he's a smart guy, not a dummy. And we had a pleasant conversation. And about halfway through, I said, you know what? You're a smart guy. You're entitled to your opinion. I said, I disagree with this and this, but I have 10 minutes left with you. I'm not going to try to sit here and convince you in the value proposition behind Bitcoin and other crypto assets. All I'm going to say to you is this. He's about my age. I said, if you can go in a time machine and go back 50, 75 years and make it so that the U.S. government does not allow semiconductor fabrication to occur on a small island an arm's throw from China. Because at that time, we didn't think it would be important technology. Do you agree you should do that, right? If you had your time machine. And he kind of laughed. I know what you're doing. I'm like, just be honest. He goes, yes. He goes, of course. He goes, great. I said, I know you have beliefs about crypto. Are you so certain in those beliefs? Are you so rock solid certain that you will give up the opportunity to have it fail here in your mind if it's going to fail? And if you're wrong, we don't have a Taiwan situation again? Or do you want to replicate Taiwan if you're wrong? If you are 100% certain that this is all nonsense, if you think 52 million Americans are wrong, all this stuff is wrong, 10-year track record of being the best performing large asset, if you think, despite all that, you are 100% certain, then I respect the dedication to your position. And we're on the opposite sides of this, but I will respect you for trying to kill the whole industry. If you're 100%, I'm being a little facetious, but my point is and he kind of laughed. He was but if you're not really, really sure, it's semiconductor 2.0. Why would you do this? Like, why would you do this? We're going to go to war potentially over semiconductors in Taiwan. Why would you have this, whether it's AI, blockchain, like why would you do this? There are people, there are very, very smart people who think this AI stuff is all BS. The founder of Linux just came out today and said it's 95% hype, it's all BS. I don't agree with them. I'm not an AI expert. But if I were a politician, I'd be like, just in case this thing turns out to be as big as everyone says, we want to have this here. So I think that's a more compelling argument for the disbelievers, the ones who aren't emotional. Crypto's gotten really emotional, and I think part of it, because I know I'm friends with a few of the famous people who are vociferously anti-crypto, and I do think some of it is when they originally came out and had some questions about the asset class, we don't do well having calm conversation. And so crypto Twitter just attack them. And these are like guys with egos themselves. And they were like, really? You're going to attack me? I'm going to come right back. And I do think for some of the big ones, especially the economists, like the smart, not the idiots, but like the really smart people. I won't name names. I think you know who I'm talking about. He's a good friend of mine. I'll say who he is. I'll say Nouriel Roubini. Nouriel Roubini is a friend of mine. I respect him. I care about him as a human being. He's a brilliant guy. Anyone who calls him a moron or doesn't, Nouriel gets it. I genuinely think if we had embraced, I actually debated Nouriel at Carnegie Hall about 6 years ago on crypto. And granted, we're friends, but he didn't hold back. And we had a fun, he conceded a few things and we had a really fun conversation. And then, I don't know, people just kind of attacked him, and I think he just kind of he's a confident guy, and I think some of our problem is that.
Well, do you think part of it that we get this type of behavior is because there's a financial incentive? You have Metcalfe's law, network effects, right? Yeah. You're part of the network. You have a token. You have a financial. If you come and attack my financial interests, I'm going all out against you.
I look, if you attack my kids, I'll come at you like a spider monkey. Like I get it. I think we need to be more mature. I think if you have someone on this podcast and they say have fun staying poor, kick them off the podcast. It's a disgusting phrase. It's a disgusting phrase, right? Even if I believe this is the best thing since sliced bread, whatever it is, Nvidia stock when it's trading at $2 or whatever it is, there's that notion that if you don't agree with my position on this, I wish you harm. We just got to get out of that. We're creating more problems than we need to. But outside of the emotionality of it, I think a more compelling argument for the naysayers is how confident are you in this? Because the evidence says you're wrong. And they'll argue, if they go back, well, you'll just wait and see. Okay, well, maybe not. I want that, if it's going to fail, I want it to fail here. I don't want it to fail with an aggressive nation state adversary.
No, great point. And you just look at the internet. If we didn't jump on the internet and embrace it, 100%. Those great companies that create 100%. A lot of wealth.
Was it Paul Krugman, or the famous guy who said, no, the internet's a fad. Well,
it won't be better than a fax machine.
Yeah, fax machine. And again, I'm not making fun of him. He's way smarter than me. He has a Nobel Prize. He's way smarter than me. I'm on record. 9 years ago, I gave a lecture at Oxford, and I got asked it's on video. I got asked a question about crowdfunding. Kickstarter, remember Kickstarter? It was early days. And I went on a rant. I was like, this is what kind of idiot would give money to a startup and not get debt or equity in return? The promise of a disc, blah, 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 blah. I bloviated for 10 minutes on how crowdfunding would never, and then just billions of dollars, because I didn't understand the mentality of people who would wait online for when a new iPhone came out, the people who would tent out for there's people who just want things to exist because they're cool, and there's a lot of those people. There's enough to support a multi-billion-dollar industry. I didn't know, and so Krugman, I don't blame him. He's way smarter than me, but if he could be wrong about this stuff, very, very smart guy could be wrong. Mr. Senator, Mrs. Congresswoman, maybe you're wrong. Maybe we're just saying get this. Let us fail on our own. Let us fail. If you're right, you can gloat about it. But if you're wrong, we have Taiwan 2.0. Yeah.
You mentioned Kickstarter, right? Part of the tokenization benefits could be, as an entrepreneur, you can tokenize yourself and people can bet on you because of the tokens. Do you think that's coming as well?
It's already there. I mean, you gotta be careful. Again, you gotta be careful because at that point, if you're raising money to start a business, you are issuing a security, right? This doesn't change securities laws. But I think about it simply as this way, and nobody. I'm not saying this is entirely accurate, but the way NFTs and tokenization could support artistic development, right? So get away from the securities world entirely. So if all NFTs and tokenization ever did, and this is my opinion personally, I really believe that all it did was make it more likely that art existed in this world, I think the world would be a demonstrably better place. Like if that's all it did, I think it'll do way more. But if all it did was say that this individual who wants to be an artist is able to, in a more efficient manner, showcase their talent and sell their art or their writing or their painting or their dance, I don't care. Like just stay out of the securities world entirely. If all it did was create efficient mechanisms for distributing talent, what a great world we would live in. I can't even draw a circle. I'm so in awe of people who have artistic talent. I can't play a note on a piano. My daughter plays like basic piano, and I sit there and cry because like I want that to exist in the world because I sure as hell can't create it. So I'm working with St. Jude Children's Research Hospital to tokenize on base their patient art. So God forbid your child gets a type of cancer they treat. They'll take them to Memphis. They'll pay for everything. And part of the process is art therapy. And they take those paintings, which are done sometimes with celebrities or famous artists, and they sell them at Sotheby's. They raise hundreds of thousands of dollars, millions of dollars. I want all of that on base. I want all of that tokenized. So the next time one of the superstars that support St. Jude, Taylor Swift, which is at her concert, she can put up a NFT that's a cancer kid's patient art. And the next time somebody wants to flex and spend $1 million on a JPEG, let that go towards curing kids' cancer. So I think I do think tokenization will eventually hit securities, but there's so much stuff in our world that the efficiency can be improved via tokenization that we don't have to touch securities for a very, very long time.
Yeah, I love that, by the way. That's amazing. And it just opens up, I think, more possibilities of a broader reach outside, because people around the world can tap into it because of the blockchain.
Just like you can call people now that you can never, I remember when my mother used to scream at me because I had a girlfriend who lived in Florida and calling interstate was like 30 cents a minute. And she was like, we can't afford this. Like, get off the phone. And now you can do a video call with your buddy in Uganda for free, basically hologram yourself. And, that tokenization could do that for financial services and financial distribution. Just like Kickstarter kind of opened up this idea of non-equity, non-debt-based incentives for companies, tokenization is that on steroids. And so I spend a lot of time thinking about maybe the non-securities way we can do this. Sports teams, issuing tickets on NFTs that then the tickets stubs, if you will, become tradable as like collectible items. But then because they're programmable, you could put like a lottery ticket system in. And if you're holding the NFT when it goes off, Steph Curry calls you or tweets at you. Who knows? Like
that'd be amazing.
Way smarter people than me. You can unlock billions of dollars of value by using these programmable units of code that are also commodities and can be traded in ways to engage in entertainer fan base reaction. Like that is extraordinary. So I think there's so much stuff we can do that doesn't even touch securities, but I do think securities will eventually.
Oh, for sure. Yeah. And I love what you guys are doing on Base. Just the other day, I was talking to Paul Grewal, and you got countries issuing stable coins on Base, and so I love it. I love that you guys didn't issue a token. I think that's really.
I admire. That wasn't my choice, but I admire the team and Jesse and Brian. I mean, I think they're doing it with integrity. It's a fantastic tool, and I think the goal. Brian's very clear. The goal is to get 1 billion people online, and if you want to get 1 billion people online, you got to make it easy. It's still challenging, right, for the average person to figure out. My mother, who raised 2 kids, never made a lot of money, and I never remember going hungry. I mean, a financial genius. My mother's a financial genius. She's in her 80s. She just started online banking. She fought it for 30 years. She moved from Bank of America to a credit union because she's so petrified of the internet. 83, 84 years old. Finally, she's like, you have to come over. You have to help me do online banking because even the credit union's like, lady, we're open like 2 hours a day. People, there is inertia. Let me time for a quick story.
Oh,
this,
sure.
This
yeah,
is
yeah.
really, this is, so long time, 5-6 years ago, I was moderating a panel with pension funds. And there were a couple of CIOs of pension funds. And the CIO of the pension from New Orleans made a comment. He just casually went, oh yeah, 97% of my pensioners are on direct debit. And the other pension CIOs were like, wow, like I wish, man, the old guys and girls and they would never, they love their paper checks, man. They would never. And he got really quiet and he said, well, after Hurricane Katrina, like 30% of, they didn't have addresses. They didn't have homes. The mail couldn't be delivered. And then he said something I'll never forget. He said, when it's the difference between eating and not eating, you'll be amazed how quickly people learned. So they had a burning platform that nobody else had. I wouldn't wish that on anyone. But my point is, absent that, it's really tough. It's really tough. The majority of pensioners still get paper checks because they're scared. So we underestimate, I think, in technology, the switching costs and the inertia that exists, the valid inertia. The valid inertia, not the corruption, not the BS, not the protecting their home, but like just people who are just scared, who don't want to spend time learning a new system. My daughters are on iPhone. I'm an Android guy. And I'm being pulled into it out of love for my daughter. I can learn iPhone. I just don't want to. I know Android inside and out. Everything works. It's right. But I love my daughters more than I hate learning a new system. But it took without my daughters, my wife would leave me. Like if it was just my wife and me, it's not happening, babe. I love you, but not happening. But my daughters, like I'll learn this damn system. But with absent that burning platform, most people just don't want to think about, I got to figure out a new way to bank. Like, so we got to make it easy. And that's what Base is doing. And that's what Coinbase is doing. And easy and trustworthy.
Oh, for sure. Yeah. I've been talking a lot about that on the podcast, and that to bring the next billion people on, you got to remove the friction. It has to feel like Web 2, but have Web 3 capabilities behind it. So
100%. It has to be safe, secure. I don't have to worry about hacks. I don't have to worry about money being stolen. Now, again, I do think people underestimate the degree they have to worry about money being stolen in their TradFi entities. I mean, everyone, FTX was horrible, no question. But in the same year of FTX, the London Metals Exchange canceled close to $10 billion of copper trades one day. Right? You're looking at me like you don't know. Nobody knows. Nobody talks about it. Look it up. $10 billion. They just canceled. I was at nickel trades. And the reason was that the market got out of whack. And if they settled all those transactions, it would have just blown everybody up. And they just canceled them. So if you're on the other side of that trade, if you made money in that trade, how is that different from having money stolen? It's not economically the same. And guess what? The courts, it took a couple of years, but the courts just now said to everyone who sued, nope, that's this. The exchange can do whatever it wants. So and I'm not blaming the LME. I think they probably did what they had to do to survive. What I'm saying is crypto gets this bad rap because when there is a hack, when there is a failure, it's a lot of schadenfreude out there, which some of it comes from us because we're obnoxious and have Lambos. But we're not likable to some degree, like right. But the TradFi has equally large problems. They're just not talked about as much.
Oh yeah, I mean, I've often tweeted out about it. You don't see certain people who don't like crypto say anything about a TD Ameritrade or somebody getting $1 billion fine, but something crypto, oh my God, it's the end of the world, sensationalized headlines.
That's right. And we have to unfortunately work doubly hard to prove ourselves because we are new, we are young. I'm not young, but like the industry is young. The technology is a little bit scary. The technology is on a relative basis untested, right? It doesn't have 50 years of testing, right? So we know it's good, we know it's working, but we have to work twice as hard to prove ourselves.
Yeah, absolutely. John, I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
St. Jude, nonprofit. Like I want people to flex through doing good. Like I don't want like the Lambo to be the symbol of like look at me. I want it to be so I'm gonna pitch something. I'm turning 50 and I'm doing something with St. Jude called 50 for 50, where instead of going to Vegas and doing, and nothing wrong with that, but I'm gonna donate money to give 50 kids chemotherapy treatment. And I want this to take off. I want guys turning 30, 40, 50. I want this to be the thing. And by the way, I'm throwing a big party, and I'm at a bar, and I'm gonna brag about doing it. You can do right. You can be cocky and do good at the same time. But let's start being cocky about stuff that matters. So my metaverse would be about how to improve giving and thinking of creative ways, on-chain advertising. So it'd be all about online giving.
I love it. And I'll talk to you about it after how I can participate. Rapid fire questions. Favorite food?
Favorite food? Mm-hmm. Sushi.
Favorite musician or band?
Oh my God, Taylor Swift, because my daughters love her. I have horrible taste in music, but she's great. I love her because I think she's a good role model.
Favorite movie?
Dead Poets Society.
Favorite book?
The Sorrows of Young Werther.
And when you're not working at Coinbase, what are you doing for fun?
For fun, I'm my youngest is 8, my oldest is 12. And I know this sounds cliche, but whatever they want to do. If it's my toes are pink right now because last night my daughter wanted to paint my toes. I didn't have time to acetone them off today. So it doesn't matter, whatever they want to do, that is my favorite thing. I know it sounds cliche, but I'm gonna cry just thinking about it. Like that just being with them is what I love.
I can totally relate. I have a 7-year-old, so I'm in the same boat.
Is it the best?
Yeah.
Boy or girl?
Girl.
It is the best thing when she's like, "Daddy, can I paint your nails?"
You can't say no.
Like, it wasn't even. I can't. I was so overjoyed at that prospect that I think about. Like, I remember thinking like this is, if somebody came up to me and said, "Do you want to go skydiving or something?" Like, the adrenaline rush I'm getting is the same with this little wonderful angel painting my toenails. So yeah, that's my most fun thing to do, is just projects with them.
I love it. John, absolute pleasure.
This was great.
Yeah, we'll have to do round 2. I think maybe later this year as more TradFi comes in, get your perspective, more stuff happening on base, but really absolute pleasure.
Hopefully more stable times.
Yeah.
Let's do 6 months from now so we can talk about how crazy this whole experience was.
Deal. Yeah, we'll be out of this macro headwinds.
Awesome. Thank you so much.
Thank you, John.
Cheers.